Operating an auto repair shop means putting your team in the path of immense physical forces. A technician routinely works underneath thousands of pounds of solid steel, a heavy load supported by complex hydraulic machinery. Beyond the threat of a lift failure, the daily environment is full of hazards. Mechanics handle compressed air systems, risk chemical burns from heavy solvents, and deal with the long-term physical strain of maneuvering heavy engines and transmissions. Because of these inherent risks, the state of Connecticut leaves no room for interpretation. This diagram maps out the state's legal trigger. The moment you hire a single employee, even if they only work 10 hours a week, workers' compensation insurance becomes instantly mandatory. The system forces a strict compromise on business owners. You must absorb the fixed operational cost of an insurance premium. In exchange, the policy provides a no-fault shield, protecting your personal assets from lawsuits if an accident happens on your floor. If a technician slips with a power tool or suffers a severe burn, that legally required policy pays for their emergency room visits, ongoing physical therapy, and a portion of their lost wages while they recover. Given the high overhead in auto repair, owners often look for ways to bypass this expense. This leads to attempts at creative administrative workarounds and intentional misclassifications to keep payroll costs low. Operating under the assumption that your shop is immune to these rules is the single greatest financial threat to your business. A misstep here invites severe state audits and leaves you personally responsible for catastrophic medical bills. The most common administrative trap is assuming that your standard commercial package covers your own technicians. Many owners buy a broad garage insurance policy and mistakenly consider the matter closed. A standard garage liability policy specifically protects against third-party bodily injury. It pays out if a customer slips on a patch of oil in your waiting area, but it does absolutely nothing for your staff. Similarly, garage keepers coverage exists entirely to protect the customer's property. It covers the actual vehicles left in your shop's custody if they are stolen, vandalized, or damaged on the lot. This chart compares the exact limitations of your specific insurance policies. Workers' compensation stands completely alone as the only legal mechanism designed to cover your own mechanic's bodily injuries, and it is the only one mandated by state law. Consider a scenario where your mechanic gets into a major accident while test driving a customer's car. You have to trigger multiple policies at once. Workers' comp handles your driver's medical bills, while your garage keeper's policy covers the wrecked vehicle. If you only carry a garage insurance package and an employee suffers a crush injury under a lift, those policies will outright deny the injury claim, leaving a massive gap in your protection. Skipping workers' comp might save you money on your front-end premiums, but it forces you to assume 100% personal liability for workplace injuries out of your own pocket. Another frequent workaround is classifying full-time mechanics as 1099 independent contractors. Owners do this to bypass payroll taxes and avoid the state workers' comp mandate entirely. The state of Connecticut aggressively monitors this practice. This checklist outlines the state's criteria. If you set the workers' hours, provide the specialized tools in the bay, and direct their daily tasks, the state defines them as an employee, regardless of what tax form you hand them. Even bringing in an outside contractor for temporary overflow work catches owners off guard. If that contractor doesn't carry their own active workers' comp policy, the state will hold your shop responsible for them during an audit. The discovery process is largely automated. Insurance carriers conduct mandatory year-end audits, comparing your reported payroll against your actual tax filings. Underreporting your staff is almost always flagged during this review. Failing that audit triggers severe, compounding financial consequences. The carrier will issue a massive bill for back premiums covering the misclassified employees, and the state can apply separate fines for operating out of compliance. If the violation is severe enough, the state enforces immediate intervention. Inspectors have the authority to issue a stop work order, forcibly shutting down your operations without warning until the proper coverage is secured. The marginal cash flow saved by misusing a 1099 classification is completely negated by the legal risk of a state audit and a locked garage door. Rather than dodging the system, established owners use legitimate methods to control their overhead. Premiums are strictly calculated at a set rate for every $100 of your shop's payroll. Because of the physical hazards we established earlier, the auto repair classification code naturally carries a higher baseline premium rate compared to a low-risk office environment. To lower that baseline, you have to manage your Experience Modification Rating, or EMR. This rating is the single most important mathematical lever you have to permanently reduce your insurance costs. Looking at this flowchart, you can see the direct correlation. Implementing a documented safety program reduces your overall claims. A clean claims history drops your EMR below 1.0, which directly multiplies your base premium downward. Achieving this requires practical, logged protocols. That means maintaining written records of your hydraulic lift inspections, enforcing the use of personal protective equipment, and strictly following chemical handling rules for solvents and refrigerants. Building these protocols requires genuine effort. Every hour you spend logging safety checks and organizing administrative paperwork is an hour you are pulled away from turning wrenches and finalizing profitable repair orders. However, completing this safety paperwork ensures you aren't overpaying for coverage. It converts a required administrative task into a direct reduction in your monthly overhead. How you navigate these rules depends entirely on your corporate structure. The state's requirements change drastically if you operate a single-person shop compared to a multi-bay enterprise. If you operate as a sole proprietor or a single-member LLC with 0 employees, the state automatically excludes you from the workers' compensation mandate. You are not required to buy a policy for yourself. Choosing to legally opt out maximizes your upfront premium savings, but it means your own lost wages and medical bills are completely exposed if you injure yourself on the job and can't work. This chart plots the reality of scaling up. Once you move from solo operator to a multi-bay enterprise, compliance becomes mandatory. You must correctly classify your W-2 workers and absorb the permanent overhead cost into your pricing. Knowing your exact position on this chart dictates your next step. For the solo tech, workers' comp is an optional safety net. For the growing shop, it is an inescapable operational shield. Beyond the state mandate, proving you have active coverage is heavily driven by external business pressures. Commercial landlords, dealership partners, and managers of commercial vehicle fleets will demand proof before doing business with you. Landlords frequently ask to be named as an additional insured on your workers' comp policy. In Connecticut, this specific legal status is not allowed for workers' comp because the benefits are paid directly to your employees, not to outside parties. This split-screen layout illustrates the correct documentation. Instead of a denied additional insured endorsement, you need to provide a certificate of insurance, often paired with a waiver of subrogation to satisfy property owners. Maintaining these specific documents allow you to sign high-volume commercial fleet contracts and secure premium real estate for your shop. Most major partners will not finalize a service agreement without verifying these forms. Workers' compensation is a strict requirement for operating an auto shop in Connecticut. When you classify your team correctly and actively manage your safety protocols, the policy provides the baseline protection you need to confidently scale